Well, good morning, everyone. Thomas Montgomery. It's great to be with you today. It's Wednesday, March 5th, 2025. We get together with our distribution partners most weekday mornings at 8 o'clock Central to talk about tips, strategies, techniques, and to support each of you. Obviously, what brings us together is probably twofold. We want to go build financial literacy, especially in the small business marketplace. And we want to translate that knowledge into fundable businesses for the clients that participate, resulting in a great side income for you. We're not MLM, we're not network marketing. This is not get rich quick. There's no cost to be a reseller or a grant coordinator, but we can make a meaningful difference in other people's lives. Today, we're going to talk about financial literacy. And I think this is probably more important than what you may think it is, because our experience is the most successful clients, the most satisfied clients are the educated clients. Now, I'm not saying that you have to go find people that already have this knowledge, but instead, why don't we accept the responsibility that it's our role to help them build their financial literacy? Because typically, the number one reason that a client will become dissatisfied with what we do is they'll have some unrealistic expectations. They don't have the knowledge that you have. And so all of a sudden, to them, it's like a game of Monopoly. Okay, I roll the dice and I can go get $1 million, right? It's that simple. Well, no. So let's start with some key points. The first of which is you all are smart. Your knowledge, your experience. You take some of you, you could be teaching MBA courses at MIT. The average entrepreneur doesn't deal with these topics day in and day out the way you and I do. We've talked about our most successful resellers, while this may be a part-time gig for them, they do a deal a day. And so that creates enough money to stick around. But it's just like if anything, if you dabble in something, it's very unlikely that you'll become proficient. And that's true for just about anything in life. So let's say you're trying to learn a new language, you're going to learn French. If you speak French one day a month, do you think that you'll become proficient? Or do you really need to practice that, use that on a daily basis? Well, for those of us that are serious about helping entrepreneurs and earning 6 digits a month ourselves, we need to really be engaged. So at some point, I'll see some of you filter out because you can be a dabbler. We won't kick you out for being a dabbler, but it's very unlikely that you'll become proficient and that your clients will be as successful if all that you do is dabble. But first of all, don't assume that your clients know what you know. They probably don't. Most clients, they think about, I need money, I want money, but they're overlooking the most obvious concept, which is number two. If you want business funding, we need to have a fundable business. You can't really get around it. Now, there's different types of capital, different sources of funds, and they have different underwriting. So I know it becomes a little bit more complicated. But with that being said, in general, we're normally helping clients qualify for large term loans. So larger amounts, low interest, paid over a longer period of time. So low payments. That doesn't mean that we can't help them with other adjunct types of financial instruments, but our primary goal is bringing clients in, getting them fundable for large amounts with low interest over a long repayment term, so it's affordable. So we do need to have a fundable business if we want business funding, and there's a little asterisk I guess we'll add to what that exactly means can vary based upon what type of funding you're pursuing. The next topic I want to address, and we're going to get over to the PowerPoint here in a minute. It's number 5 on the agenda here. Number 3, if you remember this point, it's going to help you a lot. And again, don't assume that your clients know what you know until you tell them and confirm knowledge they probably don't. So we have separated the funding process into 2 steps very strategically very purposefully. So the first phase is that the client needs to have a fundable business. And that kind of ties to what we just said, but I'll make it more relevant. So we can't just want money. We can't just need money. We need to have a fundable business. So if you're having a conversation, let's take Jocelyn. I talked to Jocelyn this morning, but he's on this morning. So let's say that Jocelyn's a prospect, and I'm talking to Jocelyn. I would ask, well, Jocelyn, are you looking for money to start or grow a business? And he would either say yes or no. If it's no, then we can talk about church or politics or whatever, but there's not a lead opportunity. But if Jocelyn says yes, then I'm going to turn around and ask, okay, great. How much funding are you needing? That's a very interesting question for a lot of entrepreneurs. A lot of them don't know. I had a conversation with a gentleman this morning driving into the office. He had left a message yesterday afternoon, so I called him back this morning. And that's what I asked him. How much funding are you looking for? And he started to give me some narrative. I said, no, sir, I don't mean to be rude. I don't need the narrative. What's the dollar amount? And so then he told me the dollar amount and the purpose. But again, I was just asking the dollar amount. So then the question inevitably became, well, do you have a fundable business to qualify for that? And of course, he doesn't. Most entrepreneurs don't have a fundable business. Worse yet, most entrepreneurs don't even know what it means to be fundable. Therefore, financial literacy is crucial. And we're going to talk about how we can best address that in a moment using the PowerPoint. So the first thing that we need to do for a client is to help them have a fundable business, because if we don't have a fundable business, then we're not going to go to funding. Now, the problem with that is most clients don't think that way, right? They're like, oh, no, I don't want to dick around with number one. I just need the money. But that's too good to be true. And that's almost what you have to guard against. Some combination of greed and financial illiteracy will present you often with people that want to skip number one and just get number two. But that's not real. That's not realistic. So again, if we treat people with love and respect and transparency and we educate them, we can overcome that most of the time. I was driving to an appointment yesterday talking to a current client, and that current client just essentially refuses this principle, just refuses it. No. I don't want to do any of this shit to become fundable. No. I just want the funding. And I said, sir, respectfully, that's not the way the financial system works. But he dug in, almost like we were the bad guys if we couldn't skip number one and get him number two. You'll have some people that are really connivers, and they'll say, well, if you can't just get me number two, you guys are a scam. Well, we need to have a fundable business first. Well, I'll take my business elsewhere. Well, you can take your business elsewhere, but if you don't have a fundable business, number one, number two is not going to happen. But the good news is, as we've evolved, gone through different iterations, we've realized the Shelf Corp is the way to go, because the Shelf Corp provides them number one, like a business in a box. We used to spend a lot of time trying to build fundable businesses, and there were so many chances, so many opportunities for things to go astray because you're dealing with people. With the Shelf Corp, it's again a business in the box. So we can fulfill both of these, but these are two different steps, two different phases. They're going to contract with you as a reseller or grant coordinator, whatever you want to call yourself. They're going to sign your agreement to buy a Shelf Corp. We provide you the editable template. You remove our information, change pricing if you want, and then get them under contract. So you're doing number one. They're buying the Shelf Corp from you, and then we're going to help them get the funding. So then that takes us down to number four. And again, at any time, if you have any questions, comments, concerns, feel free to type it into the Q&A. So we make a big pitch that there's no upfront cost. It's even listed here on the front page of the PowerPoint, which we're going to get to in a minute. And we get to the final page of the PowerPoint, it's reiterated. But what that means is, it doesn't mean that the Shelf Corp comes free. It means that we can facilitate financing for it. So Number four, if they want to finance the purchase of the Shelf Corp from you, and you might say, well, how much is the Shelf Corp going to cost? I don't know. That's up to you. Remember, that's part of your decision making, how much you want to charge the client. But if they're going to finance it, then let's go from 2 phases to 3 phases. So, first, they're going to sign the contract with you. You have the editable agreement, you remove our information, put yours on, change pricing the way you want. Many of you are using DocuSign or Adobe, however you want to do it. You get them under contract. So now they've promised to buy, they bought a shelf from you. They've promised to pay you. So then if they're going to finance it, then we go to step number 2. Then we're going to send them, and via email, we'll copy you, so it's very transparent, the financial app. It's a 1-page app, no hard inquiries, get offers. They pick from the offers. Not really the topic today, but there's more depth on a lot of these topics if you need by going to our YouTube channel, which is down below. So then we're going to finance the shelf. Then they pay you for the Shelf Corp the amount that they promised to pay you based upon the agreement that you have with them. Then we're going to work with them to leverage that shelf for large business funding. Some of you, not too many, but some of you feel that they can go straight from number 1 to number 3. But that's not the case, right? In life, if you want the use of an asset, you need to buy it first. Now, you could pay it out of pocket or you could finance. Think of a car. You go to the car dealership. Oh, I really like that car. I'm going to go take it to Florida for vacation. Well, dude, you got to buy it first. Does that mean you have to pay cash for it? No, you could finance it. It's still a purchase. It's just, is it a finance transaction? So in this case here, there's actually 2 different phases of funding, isn't there? The first phase of funding is to finance the Shelf Corp itself. Then secondly, once they have paid for the Shelf Corp, paid you, notably, that for the Shelf Corp, then we can help them take that Shelf Corp for large business funding. What we're seeing is that we need to do a better job, because a number of you are getting clients to buy the shelf, in other words, to sign your contract. That's where it starts, so that's great. But then when we're getting them finance offers to purchase the shelf, sometimes they don't like the offers. So let's say they get a $30,000 offer or 20,000. It doesn't matter the amount, but let's just say it's a smaller amount, under 50,000, for example. And they're like, well, this isn't what I wanted. I wanted big. I want at least 100,000. Well, sure. Once you have the Shelf Corp, then we can go for the large amount. Right now, we're simply trying to finance the Shelf Corp to pay you. We're not going to skip that step. Until someone's paid for that Shelf Corp, we're not going to go leverage it and use it. So make sure that you're setting the expectations correctly, that the first round of funding is meant to get payment for the Shelf Corp, not that they just sign the contract with you and they suddenly get all the rights and benefits of the Shelf Corp and we go right for the large funding. So I know that may be obvious to some of you, but don't assume that your clients know what you know. Because once they've bought the Shelf Corp, they sign the contract, and we send them the finance app, we all want to be on the same page. Okay, we're going to get you financing now to pay the reseller for the Shelf Corp. Once you've paid the reseller for the Shelf Corp, then we're going to work with you to leverage it for the larger loan. So incredibly important, maybe very obvious to many of you, but does that make sense? Does that make sense? Okay. Now, let's get to maybe the most, well, I don't say the most important, the most useful probably part of today's presentation. So on our YouTube channel, we put our past trainings. And one of those, well, actually, we've covered it multiple times through the years. It's evolved, but is the 27 mistakes. The 27 mistake, so we have the PowerPoint, which I'll briefly go through, but the recording of this is actually a damn near a full hour long. So let's debate that. So I know we live in this society that, we need to have little snippets, if it's not 1 to 3 minutes, it's too long for someone to pay attention to. But we're going to have to, I believe, we're going to have to come to the recognition that if what we're doing is real and legitimate, and what we're going to produce are large capital raises, these clients need to come in with the understanding that there's going to be some commitment on their part. And I think every one of these clients that are signing up, I would frankly say once they've signed and you could do it beforehand, but once they've signed the shelf contract with you, we believe that you should probably give them the link to the on-demand version of this, which I'll go through briefly in a moment. If not, we're going to be your backstop. We'll be your safety net. If for some reason you've not shared that with them, when we're down to the implementation, when we actually deliver the Shelf Corp documentation, which is normally 1 week after payment, we're going to reiterate the importance of them going through this curriculum. An hour, I know it's a big commitment of time, but what are we doing? We're trying to help these clients raise 100,000, a million, or more. Even if it's just at the lower end, 100,000. Is it unreasonable to say, spend an hour to really understand this? Because most people don't know what you know. And many people are filled with misinformation or gaps. And this content was designed to fill those gaps. And I'll go through it. So what's the point? This is a great I believe, maybe not very objective, but this is a great resource. You could use it to go out and teach, to generate leads. We certainly should be using it as part of our implementation. And if you're not integrating it into your implementation, then we definitely are, because we want to all have a common understanding of how business finance works. All right, so if any of you leave early, I'll just cover this and then we're going to go through the PowerPoint. I encourage you to stay, but we've got different resources. You can always call. Need quick cash, it's on the 509 Pacific website. If you're not a distribution partner but want to become one, it's free and easy. Just go to 509 Pacific and then our on-demand recordings. But let's dig deeper into what's in this content. Any questions that anyone has before we go into the PowerPoint? Eduardo asked regarding the no upfront cost, can it be 100% finance with no deposit? Yes. It's up to you. We now have about 300 resellers, and that number continues to grow. And so some resellers do charge an upfront deposit and some don't. It's okay. If you want to charge upfront, that's fine. You collect it, you keep it. But I really like going to the marketplace with no upfront costs. So if you hear of someone saying, oh, they're charging a deposit, they're breaking the rules, they're not. They're a reseller. They could do a number of things. They could charge no upfront, or they could charge a deposit. They could say, hey, client, you go get your own funding. Go to your own bank or credit union or use your own credit card, or they can submit it through us and we can facilitate the financing. As a reseller, you control that. So, but yes, Eduardo, our preferred pitch is no upfront cost. All right. Okay. So let's go through the 27 mistakes very briefly, because again, the full version, it takes us about an hour to go through. It's really good. And I want to be so respectful, because I know you all are successful. You make a lot of money doing other things, and we can't compete, right? If you're the average reseller, you're doing a deal a day, you're making $5,000 a day up front, just $25,000 a week, $100,000 a month, plus the performance fees on the back end. Good side income, but from what a lot of you tell me, it's chump change in your personal budget. So I know that I can't set forth expectations that are unreasonable. If all we can offer you is $25,000 a week, you're probably not going to put much time into it. But with all that apology, I do think you probably should go to the YouTube channel and watch the full version of this, because I'm going to give you a very abbreviated Cliff Notes now, just to make sure you know what's in it, kind of the outline. All right, so again, what are we talking about? We're talking about the 27 mistake content that helps clients understand what you know. And again, I realize you probably already know this, but just to confirm you know this, why don't you go through it? And again, you can find the full version here. So regardless if they're buying a shelf corp or not, this isn't a sales tool. However, ironically, if you use this and go to chambers, churches, in person, online, it's a great lead generator because you're educating people about what they need to know and, of course, how the shelf corp delivers this. So let's go ahead and go through this briefly. So let's minimize this. So with this, it's available on demand on the YouTube channel. We start out by talking about why it's relevant, which is kind of consistent with some of what we talked about. And then we jump into the 27 mistakes. So we talk about business name mismatch. It's important that the business name be consistently used. And again, I'm just giving you the outline here. I'm not attempting to teach you the content. You want the content, go to the YouTube channel, and it's available on demand. But we talk about business name mismatch as mistake number one, not being in good standing at the federal or state level. Because this is great. You have a lot of people that'll say, oh, no, Tram, I don't need a shelf corp. I've got a business I've had since 1967. I'm exaggerating, but for a while. Oh, great. Are you in good standing? Have you filed tax returns every year? No. My company's pre-revenue or it's been dormant for a while. I don't need to do that. Well, that's crazy fucking talk because the bank's going to ask you for the tax returns. So a lot of times people might have an entity, but it may very well not be in good standing. Third is high risk industry. So all of our shelf corporations are set up as a management consultant industry code. Very low risk, easy, in my opinion and experience, the easiest to get funding. Now, does that prevent them from doing other things? No, a business can have multiple revenue streams, but we want to obviously try to avoid anything that's high risk in name of the business and or industry code. But people may or may not know that. Again, because what's the first rule? We said, don't assume people know what you know. The type of entity makes a difference. Theoretically, you could get some business loans with a sole proprietorship, but in general, the best bet is a C Corp. But we do need to make a decision on entity type. We do need to have an EIN. A lot of people, they'll get their EIN and they have nothing else. And they're so proud. Yeah, I got my EIN. Oh, do you have a fundable business? Oh, yeah, I've got my EIN. Well, that's a very small part, but it is a relevant part. Business address is a huge deal. We see so many deals get declined because they're using a residential address or a post office box. We're real excited. We're about to break ground on our expansion. A couple of years ago, we bought a lot with a building, but we have been approved. We were looking at moving and getting a new space, but instead we decided to get a construction loan and build a new tower. I don't mean anything like 20 stories, but we're building a new building here on our premises. So they've done some rudimentary work. There's a bunch of flags out there now where they've marked all the utility lines. They have put in the security fencing. And so we're building a tower here so we can provide a business address for our growing number of clients. They don't have to use our address. This isn't a sales pitch, but it's teaching them relevant issues and then letting them know, hey, by the way, if you don't have all that, don't worry, we can help you with it. And of course, the way you would help them with it is with buying a shelf corp from you. All right, number 7, you need to have a business phone number that's not a cell phone number. We need to have a website email address. This is great. I see so many people have consumer email addresses, Yahoo, Gmail, AOL, Hotmail, porn.com. And then it's hard to communicate with them because any links or attachments, the email services feel like it's a threat. It's really a consumer email, not a business email. So having a business website and a business email helps with professionalism, and it certainly helps with our ability to communicate with them. Yes, we need to have a business bank account that's separate from our personal account. And then also, your bank balance matters. And some people are like, well, that doesn't affect me. I've got a new business. Well, that's bullshit. You can't allow these people to start making excuses and then think that they don't need to be fundable. They do need to be fundable. Bank balance matters. If they don't have much money themselves to put into business bank account, we can liquidate their AR that we give them, or they can use opportunity funds. So we always have solutions. So if there's a problem we run into, it's not like, oh, this won't work for you, go away. We can help them navigate around it. But if they don't understand that these are relevant issues, they won't even plan for it. If depending upon the industry and location, you may need to be licensed. Like we're licensed as a collection agency, licensed, insured, and bonded, but not all industries require licensure. Did I skip one? Yeah, we need to be set up with the business credit reporting agencies and then make sure we have good business credit scores. So we help them with all that. Moving on here. Collateral, big deal. A lot of people are, oh, no, I've got a new business. Collateral doesn't matter. Well, hell, it does. If you want a traditional business loan, the lenders are going to look for collateral. Is that a problem? No, we provide it for them. So again, it's not a direct sales presentation by any means, but it's meant to educate them. And then in the red, it's bringing their attention of, hey, if this is a problem for you, don't worry, we can help you become compliant. We do need to have a business plan, and we work with them in a two-phase approach. Now, if they're using the Shelf Corp, we actually provide a complete business plan. It's ready to go. If we're doing a custom build, then we do it in 2 steps. But the bottom line is business plan's important. We need to have financial projections that shows the lender that we're going to be able to afford the loan. We need to know what we're going to use the money for. And again, with the Shelf Corp, all of this is built out. So it's beautiful. So do they have to worry about a lot of these things? I guess we can rewind for a moment. If they buy a Shelf Corp, we're providing the business name, we're providing a low risk industry, we're providing the EIN, we're providing the business plan, we're providing the collateral. So that's the beauty of the Shelf Corp, is it's kind of that business in a box. But getting back to the list where we're providing the financial projections, but they definitely need that. So you got to see if you're going to teach this. And again, the easiest thing for you to do is just play the recording because it's already ready to present. But if you're going to teach this, you don't want to come off with, hey, buy from me and you get this, buy from me and you get this. Instead, here's the things that lenders look for. And oh, by the way, if you don't have it, don't worry. We can take care of it for you. See the difference? But we need to know our uses of funds, what we want the money for. Industry experience can matter with some types of loans. You need to have an advisory team. This is a great one. So many people they don't realize that running a business, it's kind of a big deal. So certainly we would like, you and I, we'd like to be a resource for them, which is kind of the bottom bullet. But they really will need eventually, if not already, a CPA, business attorney, business coach, insurance agent. So do they have to have all that from step 1? No. But once we get them funded, we are going to encourage them to make sure that they have a team of advisors. And again, obvious information to you. You all have an attorney, probably. You all have an accountant. A lot of people don't. Feasibility data to support the projections. You need to know who your target market is. So when we talk about financial projections, there's 2 types of financials. There's future looking, and we already have those built. So everyone that gets a Shelf Corp, their financial projections are ready to go. They're really, really good. If you've not seen them, we've talked about them on other trainings. Then we have the historical word. Historical would mean in the past up to now. And again, you'll get a lot of financially literate people say, oh, no, that doesn't affect me. That doesn't apply to me. It does. We need to have a current balance sheet, for example. But we'll provide that for them or help them with that. Depending upon your industry, you may need insurance. There's E&O. If you have partners, buy and sell. If you have employees, there's workers' comp. I know for us, we bought the E&O policy. As a reseller, you don't need to have an E&O policy if you don't want. But the bottom line is, we don't want clients to be surprised that, oh, I need insurance. Well, yeah, when you are in business, you need to properly insure your assets. Cash contribution. Now, this is a great one. A lot of people say, well, I'm stone cold broke, but I want to go borrow $5 billion. Do you think that that's pretty reasonable? Traditional lenders typically look for the borrower to contribute 10 to 20% of what we call the project. Now, a lot of people don't have it, and that's okay. So we can get it for them. We can do like a stack type of funding. We can liquidate the AR. So we can cover that. But this was a point of contention with that gentleman yesterday. I told you I was driving to an appointment talking to him. He's like, well, no, I don't have that, and that doesn't apply to me. Well, you're a dumbass, quite frankly, because it does apply to you. We can solve the problem. So it's never going to keep someone from getting funding because we're going to solve the problem and get them fundable. Our problem, your or my problem will be is if they just refuse. I mean, what I'm going through here isn't my opinion or your opinion. My opinion or your opinion really matters. It's the truth. This is what lenders are looking for. But again, there's different types of lenders and different underwriting. We need to run our business like a business. So we encourage small businesses to have QuickBooks or something similar to track their money. Oh, no one told me I needed QuickBooks. This is a scam. Well, you don't have to have QuickBooks. We don't sell QuickBooks, but you need to run your business like a business. And some of these people, they just don't know that. That's why we address it. Finding the right business for the right circumstances, and then we need to make sure we're getting the right source of capital, because as we've talked about, there's different sources of capital, different underwriting criteria. We can help people with whatever amount that they want, but they have to qualify, right? It's too good to be true to say, oh, okay, I want $10 billion. Get that for me by next Tuesday and that'll be fine. Well, do you qualify for it? Let's figure it out. And if not, we need to get you qualified. And then the close. All right, so we're running a bit long. Let's pull up the notes. So what did we hope to accomplish today? We wanted to emphasize the importance of building financial literacy because you're smart, you're knowledgeable. A lot of people don't know what you know, and an educated client is going to be a more successful and satisfied client. What I would recommend is that as soon as they bought the shelf corp from you, because that agreement is very concise, right? I don't think there can be a lot of confusion. When they're buying a shelf corp from you, you're giving them that edited agreement. They're signing it, you're signing it, and we can deliver that 100% of the time. I think there's zero risk of client dissatisfaction on the shelf corp agreement. So you're good. But then our responsibility comes in to take that shelf corp, once they've paid you for it, which is subset step 2, now to go apply that for a large amount of funding. So I guess my preference would be share them this link to watch this once they've paid you, or even earlier if you want. But if you've not done that, just be aware we are going to do it, because as soon as we deliver, it's actually embedded into the delivery email. When we deliver to them the entity, the EIN, the business plan, the financial projections, in that delivery email, a link to this is included. And we say, please start with this. But you can introduce that as early in the sales process as you want, or you could use it as a lead generator. So you've got our phone number, our website. If you want to be a reseller, no cost, where to access the on-demand trainings. Well, what questions? What can I do for you? Rod says this topic is a eureka moment. I think maybe it is, only in the sense that so many of you are so damn smart. I think it's sometimes hard for you. Take Ivory, take Jason. Some of you are so fucking smart that you're up at this, I don't know, Mensa or near Mensa level, and you may not communicate well with the average person. We work with average clients, not intellectually superior people like you, Corinthian, like you, Charles, like you, Bogsmith. So sometimes you got to dumb it down, and not disrespectfully, but provide the resources. Now, ultimately, are we going to make them go through this and test them? No, I mean, these are adults, but this is good information that can help them be more successful. So let us know if you need anything. Have a great day, and we'll see you back tomorrow morning. Sorry for running long. Bye-bye.